Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, November 10th, 2021. The markets did continue to go lower today. In fact, it kicked in much heavier this afternoon. So I just wanted to do a quick review of where we are, how the count fits much cleaner now, and take a look at where we are, how I'm labeling it, and where we can go to. As I changed yesterday, I am marking what was initially an intermediate A wave, and this would have been an irregular B wave. And I changed that to a 4, intermediate 4, intermediate 5. And I had left open the potential that the market could swing, hold a higher support level, swing and turn higher, and then had stronger possibilities of breaking 47.11 and heading up towards 47.34 to 47.60, I believe. In any case, that does not seem to be the case anymore, as the market did come down and nearly broke more cleanly the top of wave 1. So if this was going to be a wave, this would be a 4th wave, and then with the 5th wave up to finish that intermediate 5th. And now it broke, and it's too big and it's gone too far. So I'll get into that particular side of the count, but I just wanted to go over how it all completed. So now the primary 5 I'm putting up there. So we're in a much larger correction, and how long it takes to unfold and what's going to continue to kick it down, I think will just play out, and it'll be as it comes in. But I do think that the tide has turned. And so this picking bullishness, no matter what the cost, is now, I think, is what is beginning to turn. So buy signals from up here may not be as believed as quickly, because things turn pretty quick. I want to take it up to no, actually I don't need to. I took it to the 4 to show the count. Let's go down to the hourly. Now, again, because we've broken down far enough, I've taken off the Fibonacci extensions, which would have shown those higher levels. And I just want to now open this up so that I can go into more detail about the count that I'm now putting into place. If I'm labeling this the completion point for the minor 5, the intermediate 5, the primary 5, and likely the cycle 5. And I can go one higher. And again, say super cycle wave 3. So at best, we're at a super cycle wave 4 correction. But I'm moving that up to begin on the cycle levels, because we're going to be doing a cycle degree wave A down. And so that's how I want to function, so that we can get a picture in our minds of where eventually the market may end up. And so where I go back out to is, I'm going to go back out to the weekly chart real quick. This is the 4th wave of one lesser degree if I'm working up from a cycle degree level. I'm looking for a cycle degree wave A. That wave A will most likely find support to complete in the price territory of the previous 4. That's the primary 4, and this is where that sits. So there's a lot of ground to cover, and it's in the price territory. So it could end here, it could end here, it could end here. That would just be wave A. Okay, we still have a B wave, and then a B wave rally and a C wave decline. So we're pushing way out in the future here. So weekly chart, but that is that larger picture. So we're now counting basically an intermediate level A wave, an intermediate degree A wave, and actually I need to take it up one more to a primary degree A wave. And that then breaks down to we're in the intermediate wave 1 of that larger move. And within that, we're working down from a minor degree to fill in all the blanks. Now, I know that sounds confusing, but it's so that we can actually count all the moves. And then we're really going to be honing in on what we should expect day to day trading wise. Okay, so back down to the hourly chart and now the internals. This is the 5 all the way up. And so we're now in the initial stages off of that all-time. So we're in minor degree to begin. So minor 1, minor 2. Then as I look at this, it breaks into 5 waves. So that was wave 3, which subdivided on its own. And that is totally normal. So we have an internal wave 3, a 4, and a 5. And that produces the minute wave 1. So we get a 5 to kick off this minor third. Now it subdivides 1, 2, 3 waves, 5 waves, 3 waves. Trend is changing. If the impulse waves are heading in this direction, and I can count numerically, and not A, B, C, although it could be a C wave, but we're starting fresh. So we, as of yesterday, we kind of came in and we could have A, B, C. That's why we left open the possibility it could turn on its heels and just go straight up and finish a larger pull, this larger wave structure here, but that was not the case. So it turns into, a larger decline, number 1, and it broke, and that put the additional 1, 2, and the coming down. So what we're looking for from here is, this is basically, we're in the third of the third. So it's a 3 of 3 move. And as I described yesterday in the update, 3 of 3, as we now run into these on the downside, they're points of recognition. So at some point right in here, see, we had 2 bars. We had 2 hours of fairly just push, 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 lower. Sold, 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 sold for 2 hours. They walked it down, but they did indeed walk it down. And they completed, it walked down over 100 points. Oh, excuse me, that was the NASDAQ. In the S&P, it walked down over 20. So when you're thinking of what a wave is going to be, this is what I'm talking about. So when we see it, it helps to confirm that, A, we're in the third. It also helps to go, well, we're going to start breaking down. So I may short it. Why? Because at least on an hourly basis, we're getting hints that it's going to be coming down. And I'm sure if we broke it down into on a 30-minute, a 50-minute, a 5-minute, you're going to have intervals where you scooped up your money, then you maybe played it from the long side, and then it came back to the short side, or you just held short. In any case, it does help us to determine what we can expect from the market. And when that falls in, it gives credibility to what you're counting. So what my expectations are is that this would, and within this 3 of 3, it's again 1, 2, 3, 4, and then we're coming down in the 5th. Now, I want to add another component here, in that on the hourly chart, we broke below the hourly 200 MA, the moving average, and closed below it. After market, or into the closing of the close, today's close, they pushed it back up. Then Disney reported and it sank again. So it officially closed below the 200 moving average. That's, in my mind, cements that we have weakness in the market. Disney's earnings came out, and the stock is now back to basically where it was settling before, and that's 166. It closed at 174.45, and it's now at 166.20. and marking being marked low. Okay, so what also I can now, I'm adding all of the technicals back into this picture to build what I'm perceiving as going to be a down cycle, a down move. And we've been watching the daily and then discussed that they broke but held on to the 4. Coming in today and overnight, they broke it again. And obviously now it's closed below. But then notice it came down and broke below the 8. It got pretty well below it, but managed to get back and close just below it. So it is, if I'm going to stretch it just a little bit, confirmation of weakness being present in the market. And so if I'm here, what am I going to expect from here? Then I go back, but at least I can see the break. I can see that it closed below, but they're desperate. So here's the gig. If you are a buyer or you need to see the S&P higher between now and Friday, let's say, well, you're going to have to kind of produce what may turn out to be a false narrative in the way that you've got to show the market has strength and get itself back above that hourly 200 and close back above it so that you can get higher prices for whatever you need on Friday. If you're bullish and you now have to prove your point that you're going to stay bullish, you've got to move the market and you've got to get it back above the 200 and close. Right now, it is sitting right at it. So 44.25. It's right at it. So I'm not, whatever game they want to play, but what I'm going to be looking for is this is a 1, a 2, a 3, a 4, and then I'm going to get a 5. The 5 should come in and put a low underneath 46.25.25. That's the low thus far. Now we have support at 46.22. Come down, hold it, maybe go below, but retake it, no problem. It just needs to break that low and put in a new low and on an hourly chart. So this is going to be important, and that would then complete 3. I'd be looking for a smaller 4 and then an additional 5 to complete this larger 3. So I don't think this larger 3 is done until we're down to where I had suggested, which is at the bottom of the previous 4. And that's where I thought the market would take a pause and stop and likely complete this 3rd. That will be picture perfect. But I think that we can get there. I don't think the selling is over, but again, volatility is producing really strong swings in both directions. And so when they're done and they decide, you're looking over and like, oh, if they reach that level, maybe I should buy it. And then you turn back to your other screen and they already did, and it's up, $3, $4. It's like, wow, well, there goes that buying opportunity. But the trading is good. The trading did many quotes today. It's better than watching paint dry, or it's as bad as watching paint dry, or references to watching the lawn grow, watching grass grow, and then realizing that you got there, or when you didn't look close enough to realize it was artificial turf. A lot of little jokes went around today. In any case, I think that we need to complete this 3rd, do a 4, and do another 5. Then I would expect a little bit larger pullback, a little bounce, a stronger bounce up. And we'll work out all those numbers when it is finished and it falls in line, then yes, Fibonacci is open in June. In any case, tomorrow I think we have continued downside, but we cannot write off the bulls. And case in point, Tesla traded below $1,000 today. And they managed to push it back up to 1,075, I believe it got up to in its recovery. But you can see they closed it at 64, 67. They're marking it down after. They closed it at 67, almost 68. So they just pile back in. And that's a lot of money being shifted in and out. And it's bizarre, but that's what's happening. Amazon, another one from today. Amazon was up over 100 yesterday, and at one point was, I think it was up 50 or 60 again today. Then it tide turned and it closes down almost 100. So there's a lot of shifting around that's producing a lot of volatility. And Amazon and Tesla are both in this market. So trade smart, trade according to where your moving averages are right now. They are continuing to line up to go down. That's on the hourly chart. And trade well. And the next update will be tomorrow, Thursday, the 11th.